we have a difficult task because we are the last session of the day, but we are lucky because we are one of the most interesting one. We're talking about fundraising, and we're talking about going public, which I always thought it would be a far, far away goal for this type of companies, but apparently it may be not the case, at least at Oslo Boards. So first of all, maybe I would ask my guests to introduce themselves and the companies you work with. Eivind?
Yeah, thank you, Miguel. My name is Eivind Amundsen, and I'm head of the primary market and legal affairs at the Oslo Stock Exchange, which is the only securities exchange in Norway. So to say a little about the business and what we do is that we are a small independent exchange, but we still have nearly 100% of all the Norwegian companies that seek a listing that come to the Oslo Stock Exchange. They don't go abroad. And in addition, we have got a really strong position in several sectors, and that's the energy sector, the shipping sector, and also the seafood sector and aquaculture. So we have a position like the top three in all these sectors, and the seafood sector, aquaculture, we are by far the largest seafood aquaculture stock exchange in the world. And that's also the reason why we have this cooperation with this seminar here today, to also show that with the aquaculture and also the BioMarine, that also Stock Exchange has a global footprint. That's a really good place for companies all over the world to seek a listing. And we are specialized in SME companies, so it's companies in an earlier and small stage could get good visibility and also good attention by investors and the market in Oslo, we believe.
Very good. Patrice?
Yeah, thanks. I'm Patrice Dion, CEO of Innovactive. Innovactive is a Quebec-based company that is specialized in the development and commercialization of specialty ingredients derived mainly from marine biomass and dedicated to be used in the dietary supplement industry. We are a private company. We started our operation in 2004, and we are on a nice growth rate, and I maybe expect to hear more about the.
Why not? Okay, thank you. Patrice comes from Canada, and now Arvid Lindberg from Norway. Aqua Biotechnology.
Thank you. Aqua Biotechnology is a listed company. It has been a listed company on the Oslo Stock Exchange since 2008. And it is listed on a part of the stock exchange that is called Oslo Access. That particular list, Eivind, is a list for smaller companies, isn't it?
Yeah, that's a list for smaller companies and companies without 3 years history. That's a requirement to be listed on the main board.
Exactly. So we've been there since 2008, as I said. What we do is that we develop, we produce and we market ingredients to the cosmetic industry. And our biggest success to date is the commercialization of our proprietary ingredient, which is a protein cocktail that we have developed from the hatching fluid of salmon. Seeing the business model being successful, we are now trying to repeat that with new technologies beyond our own proprietary technology by in-licensing other technologies and putting them onto the market.
Good. So we have a real example of a listed company, an SME, a medium company listed. So it will be interesting. So first question for all the three of you, why should a company go public, and most importantly, when should a company go public? Because it's a very strategic decision. It has pros and cons. Maybe start with you, and then we'll.
So yeah, I think there are several reasons for a company to decide to go public and do a listing. But I think the main reason is that the company are growing and they need funding to go through with more investment or project or certain phases. And a company should then prepare. And you see, what about the timing? I don't think a company should go public when they're just in the startup phase. Then they should more consider to look at other possibilities for funding. But there's no one-size-fits-all for when a company should do a listing. And I think it depends very much on how the company has laid down the plans and how they are developing. Some companies will do it early in the project phase without any commercial products at all, and invite investors quite early. And the investors know it's a high risk that they have to go through with the research and development period, and maybe not have a commercial phase at all, maybe not have a product that works. But if the company will in the end succeed and deliver the product, it will be maybe a really good return on the investment. And other companies, they wait until they are in the commercial phase. They don't want to take a risk. They maybe have the funding they need in the early stage, and that could be a good idea for other companies. And of course, some companies don't go public because of the funding, but it's a good exit. Maybe they had some PE venture capital, so I follow the companies from an early period, and I want to do the exit, and then a public listing might be a possibility.
Yeah. Maybe it's the most traditional reason, no, to see the listed as an exit, than fundraising.
I think in Oslo we see there's more been a tradition to do a listing in connection with the fundraising, but these days we see actually several listings that are exits for funds.
Okay, Patrice.
Yeah, I agree with you. I think there is no definite and clear answer on the right timing to go public. It all depends on the history of the company, the existing structure of the shareholders. There are institutional VC, private investor. What are they looking in terms of exit strategy? But for sure, in my opinion, I think you need to have a certain level of predictability and future revenue stream in order, in my opinion, to live positively in IPO. Be able to support the pressure. Being a private company, if the management deliver 97% of the net earning targets, the shareholders might probably be happy and receive that positively. If you are a public company and you miss the net earnings by 3%, this could create a complete opposite situation for the company. So,
Avin?
Well,
how did you choose your timing?
Well, I didn't, to be honest, but on a general note, I think that it is fair to say that I agree with all of that has been mentioned already. And as Eivind also was saying, very often we see that this has to do with, this happens in connection with a capital raise. And all of that is obvious, and once you have sort of proven to the general public that your business model works, and then you're going to grow, you're going to have some additional funds to finance that growth, then it makes sense to do a capital raise through, for example, a public listing. From a more of a sort of a personal note, having been listed for a while, and I tried to sort of, I was, let's say, planning to answer this question a little bit differently, but from a personal note, I'd say that you'd also have to take into account when your sort of human capacity is ready for it. Jumping onto that arena without having the appropriate staffing and all of that has to do with the personnel side of it would be one thing to consider. Also, another thing is that you should also obviously consider the capability or even the ability to do the sufficient raise of funds to complete your project, i.e. to sort of cover your business plan that you'll be presenting to your investors. I mean, also, the technology should probably also be communicated sufficiently to the general public and including the investors. Without any attention nor interest to your technology, there will be an uphill battle. And lastly, obviously the capital markets will need to be somewhat ready for you and your business. I think that it would be wise, to say it that way, to try to avoid, example being financial crisis. Then that will be, try to hit the timing right. So that's on a general note.
Okay, thank you. Maybe Øyvind, I'd like to hear about what do you consider to be the main challenges that the companies face when considering going public, and how should they get prepared before that to face those challenges? And maybe here, Arvind, if you see yourself in these challenges, and how did you overcome them?
Yeah, I think there are several kind of challenges. First of all, the main purpose, if you need a fundraising, is that you actually hit the market. So you find an open window, so it's possible to raise fund. We know that they're not possible always to get investors interested, and you should have the pulse on the market to see if it's at a good timing and discuss that with corporate advisors and so on to try to find the right timing. Because if you're not able to raise the funds, it's no point of preparing the company for a listing. But when it comes to more the technical side, it's of course important that the company is prepared for a life in public. You know, if they have a lot of investors, they will be quite on your back all the time. They will see the accounts. You have to prepare accounts. You will be able to do good accounting, to timely report to the market, both financial reporting, but also the continuous obligations of the company, larger contract, and so on. So we have to have a system in order to make sure that you actually are able to do these market and stock exchange requirements. It's also, of course, important that you have a management and a board that is able to both take care of the business, the running business, and also the life as a public companies. So I think that it's the company should start at the bottom and go through all their routines, look what its requirement is for a stock exchange. And some have a good financial reporting system in place and don't have to do anything there, but might be something with the board composition and management and so on. And other might have some holes in the financials do some work there. So it's not easy to say what the company should do, but they should at least go through all the checklists and be well prepared, and don't do a too quickly process, but be sure that they actually are prepared when I start the listing process.
Okay, you want to add something, Arvid?
Well, I think that pretty much covers it, if anything at all. I think that you must be prepared for an increased level of transparency. And here we're touching upon a subject that's called corporate governance.
Yeah.
You need to be very rigorous in the way that you conduct even your daily business, and whenever there is something, you need to follow predefined routines. If we were doing a deal today, we will have to communicate that to the rest of the world, so that everybody holds the same information and so forth. So this is something that we are spending quite a lot of time on. Well, if any addition to Øyvind's comments, I would say that
it's important. Yeah,
it is important.
And if I can add
of course.
one comment, I guess it's probably tough and need strong ability to manage short-term expectations from the market and deal with the long-term plan or long-term vision of the company.
Yeah, there is again, transparency, and into that, it's the IR part. You need to talk to the investors and manage expectations and follow the plan. So if you have a timeline for a project, I think it is imperative that one tries to not to overpromise and underdeliver, rather on the opposite. I think it's more wise to do it the other way around. Otherwise, people get impatient, and you as a CEO or any other member of management will have a hard time, trying to explain why you're not hitting the timeline. So investor relations, not to be, underestimated, I guess.
Okay, very good. Patrice, what steps until today? What were the steps your company took in fundraising, and why did you choose those alternatives?
In fact, when we start, usually the standard process is to, if you are a startup, is to raise a lot of money, then go to the private institutional market. Then usually the VC would like to see an exit event through an IPO or another type of transaction. We did the opposite. In fact, we started with a big financial round in 2004 with almost all the institutional ecosystem of Quebec VC. So we were not public, but I was devoting a lot of my time to report to those institutions, and we start in 2009 to buy back those VC investors until we bought the last one in 2012, and by making a financial round with only private investors, successful entrepreneurs, and so. Up until now, we do not have any plan to go public.
It's not a goal of yours?
Not in the short term. We generate enough cash to support our growth strategy.
Okay. So. That's good. That's good to hear. And Arvid, until going public, what were the steps you took? How did you fund your business?
Well, for the sake of good order, I did not participate in taking the company public, but from the general textbook of it all, or from populistic presentations, one are often saying that companies follow the path of 5 steps. First, there are funding from friends, family, and fools. And then there are the business angels, the VCs following that, and then often there are some PEs involved, private equity, and then in the end some public listing as an exit for the PE if they are involved. But in our case, I guess the history shows that some friends and family were obviously involved in the beginning. Then VCs, venture capitalists, were involved, and then straight on to a public listing. In between, there were some additional funding by governmental bodies like Innovation Norway and the like, the Research Council. But I guess that the main sources of funding before the public listing were the VCs, and in the very, very early stages, the friends and family.
Very good. Oyvind, does Oslo Børs or may Oslo Børs appear before that those 7 steps? Do you want to appear before the VC funds or before the private equity funds? Or you are actually the last stage of a funding process?
Well, I think it's not necessary to go through all these steps. As I mentioned a little bit earlier, some companies want to seek opportunities in the public market quite early, and maybe don't want any venture capital, maybe not need any angels, maybe they have the funding for a period, and then after that find it interesting to go directly to a public market. And we have 3 markets on the Oslo Stock Exchange for equities, and the newest one, which we actually opened this year, is called Merkur Market. It's a market exactly for smaller and quite newly started companies. And on this market, it's quite easy to get listed. It's easy requirements for listing. It's cheap. It's not expensive. You don't need extensive due diligence. You don't need really expensive advisors. And on this marketplace, you can go also without any large amount of funding when you do listing. It's no requirement at all for how much funding you need or how much. So the markets, the capital size of the company the market cap of the company needs to be. And there we already have seen companies that went to this market quite early stage without funding, and they used this listing as a vehicle to reach investors after the listing. So they did not do an IPO in advance, but they did a listing and used that as a quality stamp on the company. And after that, it was, as I said to us, it was easy to get in contact with investors and do the fundraising with that pre-IPO.
Okay. Okay. Do you think the current situation with the banking system that we're watching, particularly in Europe, but also a little bit around the world, I know in Portugal we are suffering a lot with that, and the people's lack of confidence in this system may be a good opportunity for the Oslo boards and for companies going public? Should we expect a growing interest of the investors? Are you witnessing this in Oslo boards?
Well, for me, yeah, well, we don't have the same problem, I think, here in Norway with the lack of confidence for the banks, because we, to a big extent, actually be safe for that. So I still think that the companies have quite the confidence in the banking system, at least for the local companies here. But neither it's always these companies always they need a solid base of equity in the bottom. So you can't only do the fundraising either in traditional bank loans or a bond market. You always need equity, so you can't just do 100% leverage. So I think it always will be a good, actually a necessity for the companies to seek equity, and then for many companies, the public market is a good solution.
And what about for the investors? Instead of putting their money in the banks, do you think this can be an alternative? Should we expect a growing interest of new investors, maybe?
The difference between the ROI coming from the stock market and more or less risky financial tool is tight. So I think it's hard to you need to have a good story and a very good business to attract investor through IPO. And I did not follow the number of IPOs over the last 5-7 years in North America, but I have a strong feeling that this number went down.
Yeah.
So.
Okay. Anything to add?
Well, I sat in on a panel debate earlier today. Danish gentleman, I think, that mentioned that the banks, they, in the case of a startup, they wouldn't give you a loan anyway. So the lack of confidence in the banking system is only relevant in the case, obviously, for the startup itself. If funding ceases or decreases for the startup itself. But as the banks generally would be having a hard time lending you a lot of money, then that's sort of irrelevant, I guess, at the stage where the company is a startup. But as I've been saying, I think that the confidence in the banking sector locally here in Norway would be fairly strong, I would say.
What I meant was if one could expect that people, instead of putting the money in the bank, they would choose to invest in companies and to other alternatives of savings or investing their money.
Yeah, that should.
Also because the returns when you have the money in the bank throughout Europe are pretty small nowadays. So if this could be, if this could help and spur the exchange markets.
Definitely. Because as you said, the interest, the return you get from the bank, it's nearly nothing. So absolutely, that should have a more diversified portfolio to invest in. And if it comes to private investors, you see in Norway, it's people that have money to use. They only put it in real estate, in houses, cabins on in the mountains. And of course, I should also put it in the equity market. And if you see the return on the equity market for the last 10 years, it's a really good investment. And the risk is quite low to lose the money.
Okay, very good. I see that we only have 2 minutes. This went fast. One last question for you all. Can we expect one day the biotech industry to leave what the tech industry is leaving, especially in the United States and all these crazy IPOs that are happening? Is biotech has the opportunity to take that course? What do you think?
I think the golden years for the biotech is a little bit behind us. In fact, there is a lack of success actually, especially in North America. There's big companies that are still there, but you don't see newcomers and and if I look at the situation in Quebec or in Canada, there is a lot of capital that is available and accessible, but the doors to knock on has changed over the last 5-7 years, and but the capital is still there.
Okay.
The way to access it has changed a little bit, but
30 seconds, Ivan.
Well, yeah, I think at least it could be good days for a biotech as well. Maybe it's the best days ever, I don't know, but I think it's still we see a lot of interesting companies from the quite early phase startups now, and also the quite grown-up companies. And I think it's really good opportunities, and I think the investor might. A lot of these companies have a possibility for a good return. So I don't see why not also biotech should be a good investment.
Okay, Arvin?
I completely agree. I think, personally, I think that biotech has a very strong future. But, you know, as everything else, it depends on the alternative. I mean, if investors would be getting return on their investments in other areas, you know, professional capital at least always finds, you know, the most happy place to be, to put it that way, with the best return. But we see a number of initiatives, and I couldn't see why that this should not be, you know, the next buzzword. But it depends on, as Patrice is saying, you know, past successes. Obviously, and then, you know, the level of communication, and that comes down to, you know, all the way down to the individual biotech company on how they communicate with the rest of the world.
Okay.
So I think, yeah, that's.
Okay, thank you very much, the three of you. Thank you for watching, for being with us, and we'll see you all tomorrow.
thank you.